you and I have discussed before, you are actually, compared to the other institutional firms, you are a bull. And like you said, you're, debating against shorts. But when compared to retail investors and how we think, that's where we kind of debate a little bit. So I would be remiss if I don't say that your
Yeah.
10 million target for 2030 of cars sold by Tesla is ridiculously
Low. Yeah.
low. Okay, of course I'm going to say that. I just have to say that, and I can explain all that why. Even your comment about Q3 this year being lower, you saw Alexandra Mertz break down the comments made by both Zach and Elon in the last earnings call, and they basically said very slight. There's going to be a week or two where they slow down production, but because of they improving the lines, it's going to bump back up again. So I'm not expecting a massive reduction, but that's okay. That's just this quarter,
I don't
not a big
expect massive,
deal.
just to be clear, I
Yeah,
just expect
just
you'll dip a
maybe.
little bit.
Sure. That's just this quarter anyways. In my mind, it's not a big deal. And then of course, it seems like this is the EV market, and you have to decide what's going to happen to competitors and whether or not they're going to be able to, match. I mean, the reason Toyota is maxed out at 12 million is because you have 50 other automakers that are able to produce gas cars that they've been doing for 100 years, and they're basically now parity in terms of production. They've gone through the 70, 80s of the quality wars. This is not the case with EVs. We're at the very beginning, and we're seeing a lot of people not be able to catch up. But the expansion of the TAM, right? Now we got Cybertruck, we've got this compact car, and
Right.
you can't just think sitting still. You're basically looking at where they're at today and then mapping out to the future. You got to that's where you and I debate. You need to plan what's going to happen every year, additional new products, additional energy and robots and all that stuff. You won't add them until maybe a couple of years from now. So your numbers will change as the years go on.
Yeah.
Um, so the interesting the comment I made was that you are basically a bull compared to institutional firms, and we really appreciate as Tesla retail investors to get your feedback and the way you think, because you share that. You were the CEO of massive institutional firm funds. So, can you tell me a little bit, how do institutional firms think? How do they look at Tesla today? And I guess the question is, we're seeing more and more of them buying in now, especially after getting
S&P
the credit.
500.
Yeah, and yeah, that one and the investment grade credit
Investment
rating.
grade.
But
Yeah.
yeah, tell me though, what is the biggest concern they have today? That why if for those who haven't yet, why aren't they piling in at this point?
Yeah. Well, look, and just be aware that institutions is a broad
Yeah,
category. And so institutions can be the sell side community and they put out estimates. Remember, their job is to generate commissions. They're not really
right.
picking stocks per se. If you think about what they do is they try to get buy side clients to pay them commissions. And so they try to add value through their research and through their client service. And so, when I talk about institutions, it's both the sell side community because you got to compare your estimates to them because those are who publish. And then, the buy side community are people like Fidelity and Capital and T Rowe and Ron Barron and Kathy Wood ourselves. And so, let's start with the sell side. So I'm more bullish than most of the sell side analysts. My price target is higher, and my estimates are higher. So just as an example, I'm at 540 in earnings for next year, and I have 2.8 million in volume. So I'm looking for 53% volume growth for 2024. And to your point, it's because Cybertruck is coming. And I can look at the difference in my numbers because I can see Bloomberg. I pay $2,000. People ask me, where do you get all those pretty charts? Well, you pay $2,000 a month to Bloomberg and you can have whatever pretty charts you want. But I can see what the consensus numbers are pretty much by line item. So I can see what they want, what they think is going to happen in energy. I can see how much units they have. And so where I'm different from the street next year is I have much higher volumes than the street does because I remember what happened in 2021 when the Model Y came out. You had a new product, it's new news to the category. And my prior life, Herbert, I was a product manager for J&J on the Tylenol business, so I understand
What?
branding. Yeah, I worked for
I
J&J.
did not see that in my research. You were, by the
Well,
way, to
there you
tell
go.
everybody, you're a Harvard MBA, you're a Wharton economics. I didn't see
So I
product
bring it up.
manager for J&J. Come on.
Well, but I want people to understand that I've actually worked for a living. I haven't just been a
Yeah.
financial analyst my whole life. I started as a product manager at J&J on their flagship Tylenol business because it was the dream job that I always wanted. I always liked consumer, and when I got it, I was bored. It was just a very, slow moving business, and I had a big mouth then, and I would say we should do this with the packaging, and this with the advertising, and this with promotions, and people say, well, you've only been here for 6 months, Gareth, so take a pill. You know, I wasn't
Take
going
one
to
of your
take a
pills.
pill. So anyway, I gravitated to Wall Street over the next 3 or 4 years. A guy that I had worked with between my 2 years of business school found me, and by that time I had gone to work for Trammell Crow as a real estate manager. I was managing a whole bunch of properties for Trammell Crow, big real estate developer out in Scottsdale, Arizona. And it was a brand management type of job. You had to basically convince 20 somethings and 30 somethings why they should live at these high end properties and pay rents that were higher than everybody else. And the guy who hired me lived in San Francisco, and he wanted product managers. So anyway, long story short, guy that I'd worked for between my 2 years business school found me there and said, "Hey, we have an opening at Sanford Bernstein, great research shop, and you were pretty good at research. So why don't you come in and interview it?" And I said, "Well, what does it pay?" He said, "Well, it doesn't pay that much." I was making pretty good money at the time. And long story short, they paid me about a third of what I was making, but said, "Look, the upside is it's huge. If you're right and you get ranked
Mhm.
as an analyst, you can make multiples of that," which turned out to be true. So back to the buy side and the institutional community, you know, so the sell side does what it does. Their job is to generate commissions. The more commissions they generate, the more money they make. And you always have to remember that their job is not to pick stocks. Yeah, they should be right, but that is not the number one criteria that drives their dollars. If you think about Adam Jonas at Morgan Stanley, he's not, in my opinion, he's not the best analyst out there, but he's very merchandisable and he generates a ton of commissions and he asks for the order. And so he makes a decent amount of money. The guy that people pay attention to is Tony Sacconaghi. He's the number
Mhm.
one Apple analyst. He's the biggest bear. People ask me about, you know, Johnson, who
Morgan.
I don't even nobody listens to him. He's
Yeah.
out there. But
Yeah.
Tony Sacconaghi is a real player. The hedge funds listen to him. He's been bearish on Tesla forever, and so you have to know what he's thinking. So at least you can when something happens, you can at least say, well, here's the way the bears think. So that's why I pay so much attention to Tony and other bears because I want to basically knock down their arguments. And I think if you're a bull, you have to be able to do that. You have to understand what they're talking about. So the sell side is out there. There's 50 analysts. I think, let me see what the ratio is of buys versus holds versus sells. Right now, I'll tell you what it is on my Bloomberg. It is 40% have buys on the stock, 40% have holds, and
Mhm.
20% have sells. So that's
Good.
actually a more even distribution. Like if you type in Apple,
Yeah.
you're going to see, let's see, Apple's got same, about 50 analysts covered, 67% buys,
Mhm.
25% holds, 8% sells. And so Tesla has a more skeptical contingent on the sell side. And I
Yeah.
think, so back to your question, what is it that the sell side, and then we'll talk about buy side institutions in a minute, is most skeptical about? I think they're skeptical of Elon as much as, we all love Elon, the brilliant, but the crazy. I think they worry that, he doesn't, he's a great engineer, he's a great product guy, but he doesn't always make the best marketing decisions. And so they worry, is
What? Okay.
he
Uh,
going to blow up the company again?
mm.
The way it's not that the way they blew it up last year, but he cut prices and the stock fell 55% in the fourth quarter versus Nasdaq was flat, and anybody who owned Tesla got crushed. And so the worry that people have is, is he going to do other silly things? Like, remember, he had this idea that you should only have a yoke steering wheel on a Model S or Model X. And we were out there very aggressive saying, that's dumb. You should give customers a choice. They said, nope, I'm just going to give them one. And, he turned out to be the wrong decision and he went to offering choice over time. And look, we could talk about it later. He's changed the Twitter brand from Twitter to X, which I have very strong opinions about, and I know a lot of people in the advertising world do. And but he's this is what he does, and he's how do you bet against a guy who's the richest guy in the world, and he's right more than 65% of the time. He's usually right. He usually gets things right. So so the challenge with Tesla is it's very dependent on Elon. There's very big key man risk. It's not like there's a a well-known number two or a bench who's going to take over if he were to get hit by the proverbial truck. And so that's probably the biggest reason people are struggle with it. The second biggest that he's one guy and it's key man risk. The second biggest reason I think institutions worry about Tesla is because now they don't have the playing field to themselves. And there's always been competition coming, right? We've always heard about
Hmm.
Chevy Bolt and Nissan Leaf and other EVs coming, but those have been junk. They don't. It's not like the EQS from Mercedes or Rivian or other very high quality EVs that are coming out now. And so a lot of institutions say, well, when they had the whole field to themselves, you could bank on their earnings going up at 50% a year, volumes go up 50% a year. But now you can't bank on it. Maybe they will. And I still think you're going to get volume growth of 35% a year based on my models. And I think you can get earnings close to 40% a year. But a lot of institutions are worrying that, with so much competition coming in, and this is Tony Sacconotti's bare thesis, that they've never faced competition as they're going to face over the next couple of years at the high end. And so that's something people worry about. And I think we just have to get through it. I think the third thing that people worry about is he's putting so much of his time and effort in FSD, and he says it every year. The car's going to drive itself at the end of the year. And people like me, it's not that we're skeptical. I think he'll get there. I just think others will get there as well. And I look at a lot of different companies. I own Baidu in China, which has a lot more hardware in their stack, and they're already at level 4, and they're in 4 cities where they're licensed to offer robotaxi rides. Um, and if they can do it, others can do it, right? So I get the point that nobody's got as many miles and experience as Tesla. Nobody has the compute Tesla has. Nobody has the talent Tesla has. But people can catch up, and I know you disagree with me on this. And so I think that's the other worry that people have. These putting a lot of time and attention to that, and if everybody gets there around the same time, where does that leave you? And I think that's a worry that some people have. But I still like Tesla, and I'm still a bull. It's still our number two position. I love arguing about it, and I love going after bears who say the competition's coming, because the competition's been coming ever since I've owned it, and it just hasn't come.